welcome back to another video. Soil here, and today I want to talk about volume. It's one of the most important tools in technical analysis, and you must understand it and learn how to analyze volume in conjunction with price movements. Price is the king and volume is hand of the king. Stay tuned, let's get started. Volume shows the number of units that change hands in a given period of time. For example, for stocks, the number of shares; for futures and options, the number of contracts; in Forex, the total amount in terms of the currency; and in cryptocurrency market, in terms of number of coins traded over a period of time. Volume is an important factor for traders, for both of technical analysts and fundamental analysts, because on one hand, it shows liquidity level, meaning entering and exiting close to the current price in short time. And on the other hand, it shows the number of units or the amount of money exchanged for that asset in a given period of time. Or in other words, it represents the interest of the market, either buying or selling for that financial asset. In technical analysis, volume is an essential part of trading, and it plays a crucial role in confirming most of the trades. By analyzing volume and discovering the relationship between volume and price, we can correctly identify the direction of the market and possible changes in the price movement. Volume is usually represented at the bottom of price chart. Let's check it on the chart. Alright, as you can see, we have volumes here at the bottom of this chart in the shape of vertical bars. This is a daily chart of Apple, and each bar shows how many shares are traded in each day. A red volume bar shows that the price declined in that time period, and we consider the red bars as selling volume. And green volume bars shows that the price advanced in that time period, and we consider it as a buying volume. Every time that a buyer and a seller transact their shares, contract, currency, whatever the asset, the volume increases. For example, here, when a buyer buys 1 share of Apple from a seller, 1 share is added to the total number of volume for that time period. Okay, let's see how volume and price are related to each other. Let me explain that with an example. Consider we have company X with the current price of $10 per share. We have 2 trade setups here. Here, a buyer buys 10 shares of X by placing a buy order $1 above the current price, and here another buyer buys 10,000 shares of X by placing a buy order $1 above the current price. In both of these trades, the price of X increased $1. If you don't have the volume and see these 2 trades only based on price perspective, you consider them equal, same amount of increase in the price, but it's not. Here we have $1 increase that its value is equal to 10 shares, but here we have the same $1 increase that its value is equal to 10,000 shares. Here in this trade, this move is more bullish because the buyer or the buyers in reality are showing more interest to this stock, and they are proving this by putting more money. When the volume increases, it means that something has happened, a fundamental change, news release, anything that caused traders to suddenly decide to buy or sell heavily. So by analyzing the volume in conjunction with the price movement, we can measure the strength of advances and declines to correctly identify the market movement and forecast possible changes. Generally, volume is used in 3 ways: confirming trends and evaluating their strength and weakness, confirming reversals, and confirming breakouts. Let's go through each of them in details with examples on the chart. As I just said, we can use volume for confirming trends. If you don't know how to identify trends, I have a video that I completely explain how you can correctly identify trends and trade based on them. I recommend you watch the video later because trends are very important in technical analysis. Alright, let's get back to the volume. When prices advance or decline, an increase in the volume shows that the price movement is real and it has strength. As you can see on this chart, we have an uptrend and the volume is increasing, which shows the buying interest among traders. This increasing volume indicates that buyers are interested to buy because of reasons, and this interest to buy is moving the price higher and higher, as you can see. Ideally, we should see lower volume when the price moves against the trend, which is called pullback, and greater volume when the price is moving in the direction of the trend, as you can see for this case. This shows that this trend is strong and the possibility for this trend to continue is higher. And if you see high volumes in the pullbacks, just like in this case here, it shows that the trend is weakening and there is a possibility for reversal, as you can see here. And here we have a downtrend and the volume, as you see, is increasing, which shows that we have increased interest among sellers that because of some reasons they want to get rid of their positions, and this increased selling volume is associated with price declining. As you can see, the price is moving lower and lower. Here also in this case, we have lower volume in the pullbacks and higher volume when the price is moving downward, which shows this trend is strong and is more likely to continue. And if there's high volume in the pullbacks, as you can see on this chart, it shows that the trend is weakening and there can be possible change in the direction of the market, and a reversal is likely to happen, as you can see in this case. When prices advance or decline and the volume is decreasing, it shows that the trend is weakening. It indicates that only a few traders are moving the price up or down, and it shows that the interest among traders is not strong and we don't have much participation. As you can see here, we have an uptrend and the price is moving higher and higher, but the volume is decreasing, which shows that the buying interest is weakening, and this lack of interest causes the trend to lose its strength, as you can see here on this chart, and there could be a possibility of reversal and changing to a downtrend. In the ideal situation, we also see higher volume in the pullbacks that more indicates that buyers are losing strength. And here we have a downtrend and the price is declining lower and lower, but the volume is decreasing, which shows that the selling interest is gradually weakening and sellers don't like to sell anymore. And this lack of interest causes this downtrend to lose its strength, and there could be a change in the direction of this downtrend. Having higher volume in the pullbacks is the ideal situation, which gives more strength to the reversal of this trend. Increasing volume in advances or declines is not always a sign of a strength of the move and further continuation of the trend. In cases that we have an exhaustion move, it could be a sign of reversal. Exhaustion move is defined as extreme volume along with sharp advance or decline. The volume is very higher than the average volume, and sometimes it can be even up to 5 times greater than the average or more. And it shows possibility of ending of the trend. As you can see here in the peak of the trend, we have a sharp increase in the price, and here, as you see, a huge spike in the volume. This line is moving average that shows the average level of the volume. Don't worry about the moving average, I'll explain it in next videos. For now, just note that this is an average level. As you can see, we got extreme increase for the volume that is much more higher than the average level, and it shows that buyers get exhausted with no more or a few buyers to push the price higher, and this indicates that there could be an ending to this trend and a reversal may happen, as you can see on the chart for this case. And here, following a downtrend, we have sharp decline along with an extreme rise in the volume that is much more higher than the average level, which shows that everyone got out of their possessions and no one or a few remained to sell, and this shows end of this trend and possible reversal, as you can see here for this case. When we are encountering a breakout, like breaking a support or resistance levels of a price range, trend lines, or other patterns, volume plays a very important role in confirming the breakout. Either it's going to be a reversal or continuation. We must see a significant increase in the volume, which shows that the move is strong. If breakout happens and we have little change or no change in the volume, it shows that there is a lack of interest among traders for breaking that level, and it's more probable that this break is a false breakout. As you can see on this chart, we have a resistance level here, and the price broke this level with significant increase in the volume, which shows that there is interest among traders to buy, and this breakout is valid. And here we have a flag pattern. If you don't know what flag pattern is, you can check this video that I completely explain how to identify and trade based on flag patterns. Here, price broke the upper line of the flag, which is a resistance level in fact, but with no significant changes in the volume, which shows that there is a lack of interest among traders to buy and push the price higher. As you can see in this chart, the price did not move higher. Here, this trend line, which is in fact a support level, is broken with significant increase in the volume, which confirms that there is a possibility for reversal and ending of this trend, as you can see here for this case. Volume is very important in technical analysis, and it's used as a guideline to evaluate the strength or weakness of the price movements. Volume alone is not a trading tool, and it doesn't provide you an entry or exit point. Your trading decisions must be based on price movement first, and then by adding volume analysis in conjunction with the price movement, you significantly increase the odds of your trading decisions. We have also some useful indicators that are based on volume, such as unbalanced volume, Chaikin money flow, or Klingel oscillator, that I'll discuss them in next videos and show you how they are used and how they help you in your trading decisions. Alright, that's it for now. I want to thank you for watching. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. Please subscribe to my channel. Don't forget to hit the bell and make sure you watch my next videos. Step by step, I'll take you through it. Let's beat the market.